Hello, and welcome to The View from Business Forum London. I'm Joy Macknight, Deputy Editor at The Banker, and I'm joined by David Scola, Global Head of Financial Institutions at Barclays. David, thanks so much for joining us today.
My pleasure, Joy. Lovely to see you.
You were just on a panel about cross-border payments. What are the big pain points for financial institutions when they're making cross-border payments?
I think the pain points are more coming from our corporate clients and what they are asking us to achieve. And a lot of that is a reflection of what they're seeing as retail clients in an ever-evolving industry where they have greater transparency, greater speed, they're getting more data with the information, the payments that they're receiving, and they're asking us to replicate that experience on the corporate side. So a lot of the pain has been in us adapting to those requests and trying to get to the point where we can provide greater transparency, cheaper costs, and convey with the payment things like invoices and barcodes and other stuff that helps them reconcile their payments and their infrastructure.
So what new innovations are coming to market?
Well, I think the big one for banks, especially in the interbank space, is GPI, right? SWIFT has done a terrific job in getting the industry aligned around a common set of objectives to provide consistency, transparency, a tracking mechanism, all of these things that will facilitate a lot of the requests that I just touched on that we're hearing from our corporate client base. So that's a big change. I think we're also seeing the emergence of real-time payment systems in a number of local markets. And more we're starting to hear questions from banks themselves and from some of our corporates around why these real-time payment systems can't talk to each other and affect payments much more quickly than we see in the traditional correspondent banking market.
Well, what are the challenges really to that, having that cross-border payments in real time today?
I think there's three primarily. One is, and it's often an overlooked job of the banks, that we provide liquidity to the market, right? So where you don't have that need as much in the retail space because the payments are smaller, and when you get to large institutional payments, banks need to provide the oil for the machine to run, and that oil is in the form of liquidity. The second issue is foreign exchange. So there is no mechanism inbuilt in these systems for a nexus of foreign exchange to be transacted, and that can potentially mirror what we're doing on the correspondent banking side, but that needs to be determined, I think, as an industry. The last is the regulatory piece, where a domestic payment through a real-time payment system doesn't require the same level of information on a client basis that's required for an international payment. I think that can be adapted. I think we can adapt the payment systems to accommodate that information, but it needs to be worked on first.
There's been a lot of talk today around sort of collaboration with fintechs. Do you see fintechs really making a big impact on cross-border payments, especially in the wholesale space?
So not as much in the wholesale space yet. I think there is a question around particularly FX, right? If there will be more and more interplay between some of the fintech providers and some of the large corporate and institutional clients. We are seeing some firms that are starting to leverage the domestic payment platforms on an international basis. The uptake has been slow, and I think there's been a lot of questions around the model. But no, we haven't seen as much of a threat from the fintechs in the space yet, but again, I think it's an inevitability as they evolve and look for bigger and bigger clients.
And my last question is really around how is correspondent banking really being reimagined and revamped?
I think it is being reimagined in the same way that the retail experience is being reimagined, as I touched on a minute ago. I think we need to answer the question around why they can't have the same experience they're having as a retail client in the corporate space. If I'm a corporate treasurer and I go home and I can settle all of my bills and have complete transparency on all of my positions and liquidity as an investor in the push of a button, why can't I do the same thing with all of my banking relationships as a corporate, and that is going to be the driving factor behind how banks service their corporates going forward in the future.
Excellent. Thank you so much for your insights, David.
My pleasure. Thanks very much.